All right, Doc here from North America. We got 1 minute to the noise. Good morning, good afternoon, and good evening. We're going to throw the intraday. What are we going to throw up there? We'll throw up the intraday. Where's it at? Let's do the euro. Right there. So we'll see how the currencies act. The number will be out in right now. The number is out. Boom. All right. Let's fix that because that's so many ticks. There it is right there. Look at that. So they've slammed it down. So they're interpreting interest rates up. 108.60. And we're at 108.010 basically. 108.095. All right. Let's see what the bonds did. Let's get a flavor on that. Okay. The stock market will. Let's see what the stock market's doing too. Right there. Stock market has dropped. Doggy. Dropped over 100 and some odd points. Actually, it dropped 200 points in the sense that the Dow was up at about up 100. Now it's down 100. So it's down 104. Still, it's only 31%. Point third 37. Okay, we're starting to see a little bit more there. You see, it's drifting down more and more and more, and so that is, the action right there. You can see that. Let's see, it was 3.5 versus 3.4. As we expected here, as we've been saying for months upon months, this is like a deja vu, about transitory. This may become, that might be the title of this this webinar today. Transitory. The Fed is transitory again. Deja vu. I mean, honestly, that's where we're at this point. I mean, what part of, overspending? We're up 34 trillion. We're going to be spending $2 trillion this year over budget. Over budget. In other words, like whatever we spend in this country, 27 billion. I don't know what it is, but whatever it is, I can dig up the number exactly what the budget is. I know what the economy is. The economy is around 27 trillion. So, whatever the budget is this year, end result is we have borrowed another 2 trillion over that. And I don't see what we're getting for it. That's the problem. All right. Oh, let me go to the chat line. No, that's not it. There it is. All right, there's the chat line. Whoa, doggy. We got a lot of chat line up there. Let's see. Wait a bit. 30 seconds until release. CPI, U.S. inflation data impact markets, SPY. Let's see. U.S. Bureau of Labor Statistics. CPI reading is higher at 4. Yes, it is. It's a rock and roll. It is a rock and roll. So this is where... Now, the market is only, the Dow is only down about, a little more than 0.75%. Not even 1 full percentage point. So this is not exactly the world coming to an end. It's just like yesterday. We were down 0.75 yesterday and closed flat, I think, for the day. I just think that the media and people have lost perspective. They have like a 1990s mind when it comes to the markets in the year 2024. In other words, the longevity of people talking, in other words, I'm seeing the same people who were talking about the markets to a great extent in the 1980s. 1980s, yes. 1980s. And are on there now. Over 40 years, they've been the talking heads on about the market. And to a great extent, they seem about as talented then as they are now. In other words, their market goes down 3/4 of a percentage point, and the world is coming to an end. Oh my goodness gracious! Oh nanu. So, that's in the end result, we know. I mean, I keep on telling you, the numbers show it. Doesn't matter what kind of spin they want to put on it. It's just a matter of we know it. We know it, and no one else wants to accept it. In the media. And that's what the problem is, and that's why Doc is here and not there. Because, they don't want to hear this. They don't want to hear all the things that when you tune into Dukascopy and you hear Doc talking about the markets, go back, listen to those things 2 years ago, 5 years ago, 9 years ago. All accurate. Go back and listen to what they said 2 years ago, 3 years ago, 6 months ago, 10 years ago. All inaccurate. The level of accuracy is almost non-existent. They should just read the numbers and not give an opinion. But they give an opinion constantly, over and over again. So the Fed basically has a transitory mind. Mr. Powell is locked into transitory. And pretty much that's going to be that's the gist of this today. That's the strange part. And is this really a surprise? No. Do I have positions that show this problem going on? Yes. When I go and show you the last 3 months of core rate, month over month, and then you take out the 12th month. So 4 numbers. Make it very clear we're going up, and we're going up one more month. I guess what's this? So I guess it'll be May. May will be about the same. Okay? And then after that, it should start to calm down. June should calm down. July should calm down. But, are they going to go try to lower rates, in the middle of that? Go with the day that started really screaming about this, we started seeing other people inside the Federal Reserve starting to talk about it the same way. And then finally, last Wednesday, we seen Kashkari from the Minneapolis Federal Reserve come in and say, maybe one cut, maybe no cuts this year. And that was the day I was really on a rampage. I probably used transitory again or called them, they're mindless at this point. The Federal Reserve is totally mindless. I think that's what it was. That might have been the day. I don't know anymore. Because it's the same story. I'm trying to give you the real facts, and they're trying to give you the real spin. And that's the problem. Real facts versus real spin. Let's see, financial facts versus financial spin. That's the title today. I'm not even going to go with the transitory. I should go with the transitory. What a great title that is. So I'm already going to put my title in. I already got it figured out. And it just goes on and on and on and on and on. Let me go check the chat line because I was deluged on that chat line. Yana says Federal Reserve not only can't cut interest rates, but could be forced to hike. Didn't I mention it yesterday? There's talk of up to 8%. And I said it could be 3.5. It could be 3.5 or 8. Yeah. I mean, that's where we're at this point. I'm talking about the interest rates. And that's really the problem out of it all. Is that it's not, and I repeat, it's not looking pretty. And they don't want to accept it. That's what it comes down to. They just don't want to accept it. So we're going to type in the title. Oh, you didn't. You know what? You don't even see it. I never put that screen up. There's the dollar index. There you go. There is. I had that up on the other screen. I didn't even realize it wasn't even up there. I was on a rampage. So that is the S&P 500, and it's dropped 90 points from its high there. Let's show you. Where is it at? Right there. The inter. Oh, that's no. That's the that is. Oh yes, that's right. That's what that is. And here is the euro. There's the euro. Same situation. Smack-a-doodle. And everybody, when we talk about it, and people go like, "Oh my God, this market is boring." It's like, yeah, but what choice does it have? It has that 1982 feel to it. And I've made a title of that a few times, and we'll probably go to that one. I should write some of these titles down so that we could probably introduce those thoughts on another day. I think I'm going to do that. Where the hell's my notepad? There it is, right there. Let's see. 1982. Okay, that's my physics notebook. I don't know if I want to. Why not? I'll put it in my physics notebook. Let's do that. Where's that pen at? Let's see. Transitory. Fed. And what's another one? I just had another one in my head that I wanted to use. Transitory Fed and 1982 all over again. Okay, we'll have to go with that. We're going to try that. There we are. And so that'll be probably titles that we're going to do down the road, like tomorrow, like Friday, unless some other wild news comes out. Now, let's put the title in there. What did I say? Financial spin. Financial. Let's see. Oh, I know what it was. Fact. A financial spin. That's it. Put that in there. Finance spin versus facts. There it is. So there's the title now. We got the title already. All right, so what else can we say? I'm looking at some of the numbers here. Let's see, core year over year, 3.8 versus 3.7. All right, that's not too bad. All right, that's look. We're at a point now where it makes no sense to really think that anything but a sideways market is pretty much going to be around. And any changes now to SPY? Let's go take a look at the SPY. I'm sure it's in a deep sell again. Well, it was in a sell coming in, too. Here you go. There is the SPY. We can move that out of the way. Yeah, so it's now, 5 days in a sell? And the weekly is not looking the worst thing in the world right now. Yeah, it's still hanging on in there. Let's show you the QQQ. Robin's been looking at the QQQ. There it is. There's QQQ. All right, there you go. Now, obviously that was flirting with a weekly buy, but forget about that. That went into the weekly sell last week. And the Dow Jones Industrial Average did the same exact thing. Let me go like this. Where's that at? That is right. There we are. That's got the old symbol in it. Remember, they've switched some symbols over the last couple days, a couple weeks actually. Last week, they really switched around in the symbols. Right there. All right, there we are. As you can see, this product has been widen that out. I'll have to double check to make sure this is right there. But you can see we've been in a daily sell since back in here. And so, it's been showing a lot of pressure. What else can we say about that? Like that. Yep. Yep. Look at that pressure on the Dow Jones Industrial Average. And, that's down a 1.19%, 1.2 basically percent. I mean, it's not the worst thing in the world. Let's see. Any changes in SPY? Yeah, SPY 727. Let it crash. They're not going to let it crash. They will not. There's a Fed put out there. We'll still got the opening. Right. Maybe there'll be some pressure on it. I think they're already bouncing. There's a Fed put out there. Awful hard. Look, see right there. It's already, this is the euro. It's bouncing up, and so is the S&P. It's bouncing up too. See? There's the bottom there, and what is that? The 5.8. So we go like that, and we'll make that larger. So you can see our algorithm went into a buy right there. Did it twice. Went into a buy right there. Caught that ride up to there. Went into the sell right there. Went down for a little bit. And now it's, it's probably going to go back to that yellow line that we've been staring at. These are those lines we've been staring at for a while. Now the question will be like they did here. See, got down to the yellow dotted line we've been watching for weeks now. Hit it again. And then, basically... Giannis, you could put up on there, when you go into look at Doc, let's see, let's just do this again. You know what? When you go in the Doc and the presentation, it says, I'm looking at the beginning of it. Let's see, DocDow did his first purchase. I think, you know what? You change that. DocDow's, I think instead of saying about oil stocks in 77 and floor trading, you can leave it on the floor trading thing because that's important. People will know that. Has been market for 45 years. He shares his algorithms and support lines, support and resistant lines. Why don't you put that in there? I support, matter of fact, I'll write it in the chat line. Okay, I'll do that. I'll put it into the Skype. Exactly. I will put it into the Skype. Exactly. Because maybe that'll get some people to come in and look and talk, and we can... This is what my origin was to begin with. I wanted to talk about technical analysis on all these products, but we really don't have anybody asking many questions about the technical analysis or the algorithms. They just basically... and I have no problem, showing the direction of a product. That's what we're hoping people will ask questions for. It's like, oh yeah, where's it headed to, All right. So, let's see. That is the S&P. Let's take a look at the dollar index. Dollar index. Right there. Oh! Went after our 104.50 again. That is so funny. All right. I have to remember what I said now. What was it? That's why I want to... Let me write this down. I need to write that down because we need to change that. Let's see. Yeah, they're taking that. They're talking about that again. What's today? Today's Wednesday, right? So they're taking apart the last Friday employment number. What a horrible number that was. 303,000 K non-farm payrolls, which was great. Unemployment rate sitting at 3.8. Problem was that something like 80% of it was part-time jobs. Part-time jobs. Private education and health service, 88,000. Professional business service, 7,000. Retail trades, 17,000. Manufacturing was zero. The country's not growing. Just not growing. So, all right. Okay. All right, so where do we go from here, traders? They're going to calm down. They're going to bring them back. Look, we've got a Fed put. Literally, that's what it comes down to. And so you can see right there, there's the euro. The euro is pressing down, trying to get into the sell. It's been in a weekly sell for 3 weeks. That pressure is on it. It's not letting go. Let's see. All right, I'm trying to write the stuff down that I said to you. Let's see if I'll remember it. I will remember it. I'll do it after the webinar. All right, now from there, what else do we got going on here? We go over to cable this morning. Cable same way, flirting on the edge of that daily sell. It's not the worst thing in the world. We are 3 weeks in a weekly sell. So there's a little pressure there. But, when you have a Fed put, there's no problem there. You know what I'm talking about, right? You know what I'm talking about. Free money, baby. Right now they're probably offering a bunch of money to a bunch of hedge funds and mutual funds and anybody else that will listen. How can I give you free money tonight? And will we hear the media talk about the fact that the Fed feeds money to funds every night for free? Nope. Only Doc talks about it. So there's a free Fed put, and there's that, buy on weakness. And I seen the Dow was down 1.25, it's a 1.25%, and trading down about 525 points, and now it's down 440 points. A 3 to 5% drop in SPY in one day? Nah, you're not going to see that. Martians would have to land on the White House. It might go up, actually, if the Martians land on the White House. But, no, you're not going to see anything like that. The Fed is out there right now, propping up the market as I speak. Before you know it, it'll be 50% back. Let's go over to it again, just for an intraday. Ooh, we jumped over to 104.50. Cool. Let's see. Right there. It's climbing. It's going to weasel its way up to the yellow line, dotted line again. That's all it's going to do. The Fed put is there. Let's see. Media calls 1% plus moves crashes. I know, that's what I'm saying. They call 0.5% moves crashes. Hell, I've heard them say 0.25% move a crash. I'm like, what? Robin and I lived through 25% drops. 20 drops. We picked the perfect bottom in 2020. There was a 35% drop. The Dow was down 35% in 2020. And Rob and I were sitting there screaming to the whole world, buy it now. Just buy it now because it's just going to go back up. The Fed wanted it to go down then, as I talked about yesterday. They wanted the market to crash, and they let it crash. And they got rid of all those put sellers that they hated. All right. Only the politicians And the Fed can make money, not traders, off their strategies. Gold is up only a half a, 0.2%. Treasuries are up. Let's go take a look at the treasuries. We haven't looked at the treasuries lately. Let's go take a look at them. Do I have the treasuries in here? Right there. So this is the price of the bond. When the bond price goes down, interest rates go up. And so we fell down to 116.08, and now we are at 116.18. 19s are trading, 18s are trading. It's it's going to climb. Now the Dow is only down 400 points, and it's like eat at what's his name? What's Pal's first name? Oh, I forget what Pal's first name is. Jerome Powell, is it? Eat at Jerome's. Come on in and eat at Jerome's at Powell's. Come eat there. Come here. We'll give you free money. We'll give you a hamburger and we'll give you $1. You don't have to pay. What's your name? Oh, your Citadel, one of the biggest hedge funds in the world. Oh, no problem. They get $1 billion a night. Every night they get $1 billion to play with for free. $1 billion. The Fed never takes it away from them. Something erases 2-day gains and they start screaming like Biden not getting ice cream. Of course. Well, I don't know about the Biden and ice cream, but media calls 1% moves. Yeah. I mean, spin. That's why our title today is Financial Spin versus Facts. That's exactly it. Maybe my titles sometimes are too sophisticated. Maybe they need to be more simplistic, like free money, free puts, stuff like that. All right, let's see now. Even Bloomberg is saying delaying Fed rate cuts. May. Forecast again, likely to delay. Likely. All right, now, where were we? We were at the cable, right? Let's go back to the cable. There's the cable. And it's just on the edge. And it's in the weekly sell. So not much room either way to do anything. It's just sideways, really. Let's see how the inflation fighters are doing. Pretty good there. Look at that. That currency is pretty steady. And no doubt it's gone up from the 83 area, 83 and a half, 84 to the 90, but it's not at 101. Over, was that 15 months ago, it was at 101. So they need to teach the Turks how to deal with currency. And then, third day now in the buy, I don't know, was it 12 weeks now? 4, 8, 12th week in a buy. Since the 86 area. That's what is that? That's that low. It was all in this area here, so that low is in the 86.06. That low there is 85.51. So it's just it's just steady, smart banking. The Swiss has got their game together. All right, now from there we'll just jump over to the yen. Oh, yen busted through that 152. Let's see what's going to happen there. 4 days in a buy or 4 weeks in a buy. We've said that the what do you call it? The Bank of Japan has basically made it clear that I think they're going to support that 152. And I'm not sure exactly how they're going to get away with that, but they're going to try. They're going to try supporting it so that it's not driving the markets too crazy. And I guess I know the Nikkei was down again. Matter of fact, we can go over and take a look at the Nikkei. As I take a sip of my tea there. All right, let's go take a look at the Nikkei. There it is. And there's the Nikkei. Yeah, see, it was down. It's flirting. It's flirting. It was trying to get up into the buy, and then it failed. It just failed at it, unfortunately. And then you can see the weekly trying to get down lower and lower. We'll see how it goes. We're still a day behind on this indicator right there. And that is the Nikkei. The Nikkei. This is up to date. This is up to date. No, I'm sorry. That's the close of yesterday. And chances are when it's a red dot and this is underneath the line, today is probably in the sell also. But we'll see. We'll know tomorrow. And the weekly will show us a little bit more tomorrow. It'll show you the Tuesday. Basically, it's like a day and a half out type of thing going on. And then let's see what else we got going on here. That's the Nikkei matching up to the currency. I don't know how long they'll last above the 152, but more than likely, as the money will run around in circles. It'll look like a cat chasing its own tail. But in the end result is that the market was relatively comfortable. I want to say the markets overall were relatively comfortable to the idea that we were going to, possibly not get any interest rate cuts right up here today, and so that was truly the not to be not to basically play on it much, but what it really comes down to is that we know that they will find a way to turn this all around and go sideways, and the market shouldn't be too panicked. I mean, we're only down 1.13%. Basically 1.15% with the Dow down 444 points. So that's not a crash. I think the Market Technicians Association considers a crash 2% or 3%, one or the other. Google market American mark was it the American? Let's see, was it the Market Technicians Association, MTA, and the American one? And what percent is a market crash? Take a look at that. Yeah, and we'll go from there. Matter of fact, I think I'll do that and see if I beat them. Yeah. Okay, let's Google that and see. Where is it at? Google. MTA market, not the Metropolitan Transit Authority. Market. Technicians Association. All right. And so what is in percent a market crash? Let's see what that says. What percentage drop in the stock market is considered a crash? Is whatever you want it to be. There is no strict definition of that term in the stock market. If you're toting your YouTube views, 4 answers. 1, voting. Let's see, speaking in general. 1% to 10% is called correction. 1% is a correction. Is 2% is 20% is called. Let's see. All right. So, is 20% a market crash? Uh, 10% of their value very quickly. Okay. And that, in other words, and you probably can go and look at the circuit breakers of the New York Stock Exchange, and I think they start off at 12% or 10. I think they start off at 10%. So that is really a crash because circuit breakers go on at the New York Stock Exchange. Now let's go look and see what the circuit breakers look like. NYSE circuit breakers. NYSE circuit breakers. Let's see. Does New York have circuit breakers? What are the circuit breakers for the S&P 500? Okay, U.S. regulators have 3 levels of circuit breakers, which is set to halt trading when the S&P 500 drops 7%, 13%, and 20% circuit breakers. So I would go with the 7%. The 7% to me would be a crash. Anything underneath that is just a correction. How's that? I think that's fair enough. And I think we might, let me put that in my notebook too. I think we're going to have that conversation. Let me just put that in. Circuit breakers. All right, there's another topic we can do. All right, Doc is on fire. That's what it is, because no one's asking any questions. If you don't ask questions, Doc goes into ramble. Let's see. Doc shows the screen if you search something. Okay. Let's see. Doc, show the screen if you search. Here we go. Let's see if I can get that over there. I was doing on it. I got 4 computers here. So let me see if I can get that up on the screen. I'm going to get that up on the screen. Let's see. How do I get that up on the screen? Let's do this. Let's go like this. Let's see if I minimize that and go like this. Let's see. Here we go. We're going to put it up on the screen for you so you can see both of those. We figure Biden will say something about Donald Trump. He'll blame Donald Trump for this. Let's see. So NYSE circuit breakers. Okay, so let's switch over to there. There it goes. There's the circuit breaker one right there. Right there. Right there is the circuit breakers. All right, so 7%. I would consider then 7% a crash because they shut the market down. I mean, that's not something that's done. Matter of fact, it takes a lot of legal work to shut a market down to begin with, just like closing a bank. You just can't close a bank. You have to have reasons to close a bank, You just can't okay, guys, don't come in today. Okay, so now let's go to the next one. The MTA. Let's see, so market. Market Technician Association. There it is right there. Let's see. Now from there, we ask Market Technicians Association, what is a crash? Let's see, what is it? Market Technicians. What? I see. Market Technicians Association is a crash. What? Okay, there we go. What percent? The CPI peaked at 14.8. Let's see. This one, basically, the market, they said more than 10% of value. So anywhere is between 10%, and I can't see where that's at. Where's that at? What is in percent market crash? What is in percent market? What percent in what is in percent market There we are. Let's see if that helps. Don't see it. I have it up on another machine. 13. There's something. Stock market crash of 29 was nearly 13%. Hell, we are 25% in this. Was that 80? Was it 85? 80? 86? 1986 crash in. So pretty much. Ooh, there's a good headline. Let's check that out. The Fed has rigged the stock market to crash. That was back in that was in 23, but I don't know about that. I would say more like in 20. But anyway, there we are, traders. All right, now from there, let's go back and finish off the currencies. I think 7% is legitimate, and it said in there correction, basically. That's what it comes down to, correction. All right, now from there, let's go check out. There's the yen. Let's go take a look at. Oh, let's put it up on the screen here. Right there. Let's put up there the Turkish lira, the great experiment. Right there, Euro Turkish lira pairs trade. You see it's coming down. Good, it's gaining some value. I guess it's because of the euro. Look at that. It's pretty low on the weekly. It's back down to this area here. Wouldn't that be nice if this product would go back down into like the 30s and help out the locals? Low 30s, like 31, 32. What else do we got going on there? From there, we'll go over to the Swiss. There's the Swiss. No, not Swiss. South African Rand. That's what we want. We want the South African Rand right there. Now, South African Rand is making a pop on the upside at the moment. It's losing against the dollar. But will that last? I kind of doubt it, Let's see. Over to. Let's see what gold looks like. There is. Where is it at? Where's the gold at? There's gold. You see, gold is flirting with the daily sell at the moment. We're going to put a little reddish line in there, like so. It's just, I like to draw the line when it's up here so we don't go over the numbers. We'll just change that color there. There it is. Starting to play with a little sell there. Let's see, inflation is going up and gold is coming down. Talk about feeling like everything is confusing. Yeah, everything is confusing. There we are. And then let's take a look at the silver. Silver's playing the same game. And it's pushing down. So we'll do the same thing there. Put that. We don't know. By the end of the day, it could be just turned back up again. But, you saw the pressure on the South African Rand. And you're seeing the pressure on the silver. And what's weirder is the pressure on the rand is the fact that the U.S. dollar and inflation is increasing here in the States. And so that's almost like what they call an oxymoron. That's kind of crazy, right? I mean, we're looking for inflation, and you buy those metals because of the inflation and in safety. And they just showed us that the world is not exactly in the best of shape, and it don't care. How about that? It don't care. All right, now let's take a look at that's copper there. See, copper's not backed off that much. I mean, it's down, but the weekly looks very fine. All the weeklies look fine. It's not disturbing. It's not any major slide. They're just giving up the profits like there. I mean, look, the weekly is way up there on the gold. You see the weekly on the silver, same thing. It's just background noise at the moment. At the moment. And then we go to platinum. And platinum still holding up real well in that buy, so that's cool. Let's jump over to crude oil. There's the crude. It went into a sell yesterday. It's up a little bit more today, playing around with the 96 area. And what else is there to say about that? Let's take a look at heating oil. There's heating oil. It's trying to lift up too. So that's because I guess the product is going down, the material that they make it from. There's the ooh, banged up against that line again. We're just underneath it right now, trading at 116.14, pushing into the sell. We'll see. This is going to be a very interesting battle going on today. Today's a very interesting battle. Very interesting. And then from there, that's the bond. And so let's go over to the natural gas. There's the natural gas. Oh, you know what? Let's now jump back over to beta. Let's see. There's the beta. Jump over to the beta right there. And let's put in, there's the crude oil. You see it's trying to lift up. Still in that little sell thing. Like 2 days in a sell now. Now let's go over and look at Brent. There's Brent. Brent, not sure what's the problem there. Brent is not lifting up. They're not lifting it up. Interesting. Wonder if it'll get straightened out soon. You can see it's been in a daily sell. Even yesterday was in a daily sell with that green dot. So they were already anticipating it in the Brent, I guess. From there, we'll go to natural gas. There's the natural gas lifting up. Went into a buy yesterday, and it's fighting to stay up there today. So this is going to be a third day now in a buy on the natural gas. Inflation. Now, we go over to our the stock over in Spain, the energy company there. And there it is. It's been in daily sells for weeks upon weeks. We're above the $20 area. It is down a little bit. It was playing underneath the 20 yesterday. Still doing it. And the weekly's been in a weekly sell for 10, 12, 13 weeks, something like that. All right. Let's see. So that's pretty much the energy sector. So now we'll go and take a look at world stocks, unless someone has a question. And we'll stop what we're doing and jump into the question. All right. Now from there, let's take a. We saw the Nikkei. Let's just take a look at it again, maybe a little bit deeper. A little deeper and a little deeper and a little deeper. Right there. There it's just pressing down. Didn't get into the buy. And the weekly is heading south. We won't know for another day if it's starting to flirt underneath the zero line. Tomorrow we'll have a better idea. Oh, sure. Let's do that. Let's do the stocks. Sounds good to me. All right. File. Let's do this. There it is right there. And We're loading it in now. And then from there, all right, let's switch over to right there. There we go. And that is, what is that? That's Kiss. They're smackadoodling that. Okay, nice. All right, now let's go over to the Yano stocks and see what's going on there. First one is AMD. Let's check out AMD. There is AMD. And you can see it's flirting with the daily sell today. As we're starting today on the 10th here. We are through the weekly now for a second week. Let's just remove that. Right there was the weekly. There it is right there. Yeah. Went into the weekly sell on this day, and then, you know, they smacked it there. And let's grab a red. So went into the sell there on the daily. Went it back into the buy for one day yesterday. They're all short covering. You don't take the longs on that anyway, so it doesn't matter. And now we are flirting with the daily sell again. And we've been in a weekly sell right there for 2 weeks now. From that point right there. All right, now from there we go over to let's see. What's the next one? The next one is, let's do this too. I want to save that. Let's see, where's it at? Hot inflation numbers. All right, now the next one is the ARM. Let's see what the ARM looks like. There's ARM. ARM has been in the sell for 2 days, right? There, that's the 9th, that's the 10th. So, right there. And last time we looked at it, it had gone into the buy right there. And ran up to there and then went into a sell. Still in a weekly sell for 3 weeks, so it's just a lot of sloppiness. And then from there, who's next? Chevron. Good old Chevron. What do you call it? Dinosaur juice. That's it. Dinosaur juice. Chevron. And there's Chevron. Chevron's unchanged, and it would make sense for it to be unchanged, and it's in a weekly buy for 3 full weeks. And it's been flirting. Went into the sell there. Went into the buy there, and it's coming in today in a buy right there. With us in a weekly buy, you wouldn't be shorting it, that's for sure. And then that's dinosaur juice. Everybody needs to have a little dinosaur juice in their portfolio. An update to the safekeeping tickers. Should one hold these over the next month? I'd say so, yes. That is the precise question. Well, the ones that are in weekly buys, definitely. The ones that are in weekly sells, sell a call against it. You know, just sell a call against it. Take a little of the premium if you're nervous and buy a farther out put, you know. But let it pay for it. Now the Dow is down under 400 points. And so that is the story of it all. What else can we say about any of it? I guess let's show you the stock indices, and I'm going to get out of here. I want to be prepped for the market to open here. So let's go to right there. And you can see there's the S&P 500, which was playing with the buy and is not anymore. But we'll see by the end of the day, traders. I don't have a lot of confidence at all about that. You know, and then when we go and look at the intraday, right there. Let's see, how close is it to the line now? Whoop, whoop, there it go. Whoop, there it go. What's up with that thing? Let's see if we tighten it up a little bit more. Okay, so we're at the highs. We have to get up about 15 points more. That's nothing. So, anyhow, traders, we're out of here. This is Doc from. Oh, it should Update. That is precise question. Should one hold those over in the next month? If they're in weekly buys, yes. If they're in weekly sells, sell a call against them. Don't sell the stock itself for capital gains. Sell a call and buy a put. Put a collar around it. All right, traders, this is Doc from North America. We will catch you tomorrow, same time, same channel. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. And Giannis, I will fix that over the next couple hours. I'll be tied up trading. So, ta-ta for now.